All right, guys, let me get back into it. All right, so I'm making this video for market structure. If you guys are a supply and demand trader, an ICT trader, fair value gap, fair value gap trader, this video. Oh shit, it's my. Never mind. You're going to want to watch this, and so here's basically what we're going to do. This is a market structure tutorial. I'm right now trading futures. I'm on gold. We just put on the full screen. That's my actual number one tip, is go on full screen, because the whole point of trading is to focus on the charts. And if you can't focus on the charts, you can't be successful. And the number one way to zone in and just focus so you can be able to increase your ability to spot more setups is to just focus on the chart by simply going full screen. I know it's simple. But right now I'm on gold. Market structure is bullish. You can see the black lines represent my market structure, my highs and my lows. I don't trade with trend lines for my trend. I utilize market structure. And how I do that is, on gold, I actually use specific time frames for gold because it moves slower than other futures. And so right now, I'm on 45 minute. If you go to the 30 minute, 15 minute, 15 minute is where I start with gold. And so usually when you zoom all the way out on a currency pair or forex pair, futures pair, you're going to see price in the middle of your screen. You're going to want to drag it all the way. Sorry guys, the fucking light's in my eye. You're going to want to drag it all the way to the left. And when you're doing that, it's going to allow you to focus on the current market structure. So if I had it in the middle, I'm trying to mark up all of this irrelevant structure that I don't need to look at, especially since gold moves slow. So what I'm going to do is okay, let me try this again with the light. I'm going to simply zoom out, price action to the left of the right of the screen. It's going to the right. And then now you see the current structure, the current trend. You don't need to pay attention to what's happening all the way back here. You need to zoom out and mark up from right to left. So the first piece of structure for your trend you would mark up would be the first black line that I drew, which is right there. And after that, you would have marked up down here. Then you would have marked up here. So your high, your low, your previous lower high, and your previous lower low. And so once you have that identified, then you can start looking for your actual setups by identifying what you want to see based off what you trade. So for me, I only trade fair value gaps and order blocks. So if you're buying, like for me, if I'm in my market structure and it's bullish, I want to be buying at the low point. So right now, where that blue arrow is pointed to is that low point that I was talking about. So this low point represents a fair value gap, which is, like I said, which is what I trade. I'm currently waiting for gold to come back down and drop and lower in price and fill in this inefficient price action, because markets can't go straight up forever. Markets don't go straight up. They go straight up, down, up, down. The downs are the corrections. So when you're in the market, guys, the expansions you see that have all those gaps and have all those supply and demand zones are created by volume and money and capital in the market. When there's enough buying power, whether it's an independent institution, hedge fund, whale, then they're going to bring price down. And that's going to reveal all these gaps they left behind that they're going to go and fill in when they retrace. Your job is to enter on these retracements, and I say it every video. And the reason I do it every video is so you can actually learn it in repetition. So sorry, I'm literally rubbing my eyes because the lamp just fried the fuck out of my eyeballs. Oh God. Oh my God. I feel fine, but it's just like fuck. Sorry about that. Back to the video. So I'm waiting for price to come down, and I'm going to buy here. And you're probably wondering, well, you may be buying there, but why is that gap? Why is it so big? Like, how are you going to buy that if it's such a big entry? So here's how I mark my gaps up. This box that I actually drew represents the space of the gap itself, but it's not my actual entry. Usually, when gaps get filled, price will come into this space. Like I said, this rectangle represents the area of space in the gap. Price will come down from this point, or keep going if it has enough volume. But price comes in and fills in inefficient price action. Price doesn't just go and tap the edge of the gap, and you don't enter off the edge and then goes up. Price usually comes down. At least it fills in at least 50% of that fair value gap space, because this is the actual area, right? And sometimes it even comes all the way this far down, close to the wick or the beginning of the gap of the demand, and then it will go and reverse itself. So, for you guys, when you're trading gaps, I want you guys to do this. I want you to delete what. Oh, fuck. I wish. Why don't they make an undo button on TradingView so I don't fucking delete all of this shit? Let me see. Hold on. Let me see. All right. So the first thing you're going to do is you're going to get a line and you're going to drag it in the middle of the box. And while I'm doing that, I'm dividing the box in half, and I'm dividing the area of the gap. I'm dividing the gap in half, 50%, because gaps get filled. They tend to get filled. Fair value gap is 50% of the actual gap itself. And if it doesn't, that means there is such high volume in that current market that it is pushing the market beyond it. And sometimes it won't fill in the gap. Sometimes it will just keep going straight up, but not forever. It will come back down. And when it comes back down, it will fill in other gaps it made recently, and may not go down and fill that beginning gap that you were planning on. So just keep that in mind. So I just split the gap in half, and now I'm going to take my entry or my risk reward tool, and here's how I would enter. I would enter right at the middle, and then I put my stop loss right here at the edge of the gap or at the beginning of the gap, and that is the number one type of entry that I take. And the second type of entry that I take is I will drag the gap box. Let's leave the box open. That's the space, and I will drag the red line represents where I would be entering, right? So I would drag this red line down to the actual beginning of the gap, and that is where I would drag my entry, and then I would drag my stop loss at the actual candle. So so your stop loss should be right here, right? Your stop loss should be right there, and the reason is I like to keep type stop losses because when gaps get filled, the banks, institutions, and smart money, they don't come and fill in these gaps and hang out. You'll tend to see a rejection candle that comes into your entry, and it will look exactly like what I'm drawing to you right now with that vertical box that I'm drawing. I'm trying to make it neat so you guys can actually understand this. You see that blue little line that I drew? That's supposed to represent. If you can't see it, here it is right there, the arrow. That blue line that I just drew in this box represents the candle body. This blue line represents the wick of the candle tapping into my entry. And then often after that, you'll see price come and candles, bullish ones, go after that and start going up. So you won't see price hang out in these areas. When you're trading fair value gaps, trading supply and demand is trading with precision. So if you're trading at the right correct levels, you shouldn't have much drawdown. And yeah, guys, that's all I wanted to make for this video. Remember, check the news because the news creates the gaps. That's my secret cheat sheet. And yeah, so I hope this video was helpful. And I will wait. Let me just write out the steps. So here's some tips for you guys. When you're trading gaps, identify the gap after your market structure. So identify gap after market structure. So that's my number one tip. My second tip for you is your stop loss should be tight. So it's because you're trading institutional based concepts and you're trading smart money, so you don't need to have this big ass stop loss because you're trading with the banks and with these whales. So they're going to tap and go. So your stop loss should be actually rather tight, and you should actually know exactly where that stop loss is and why. Right? What the fuck? And yeah, and my third tip for you guys is to actually, it's actually not a tip, it's a note. It's a note. So note, news creates or news makes your FVG. Right? We're gonna go with that rule. I don't care if you're trading forex or futures. That's your new rule. News makes your FVG. So I want you to go on Forex Factory every single day, and when you see, if you're a gold trader or NAS trader, US3, SPX, if you see US dollar news, be aware of that. You don't need to know what the employment rates are, what the retail sales are. You don't need to know the specifics of that, and they are important economic indicators, but you do not need to know the specifics of that to make money with, because there's tons of traders that make money and they don't know that. You just need to understand the fact that in itself there is news that will be coming out, and when there's news coming out, that means the market is going to expand, and then you have potential to actually find a trading setup on time during the session to make money. And so that's what I've been trying to say. And so under my face right here is where the steps that I want you guys to actually mark out, and I want you guys to look at these steps, and I want you guys to write these down. Okay, what is that? Identify. Oh yeah, sorry guys, I didn't write this properly. Identify FVG aftermarket structure. First tip. Second tip, your stop loss should be tight, right? And then the third tip is a note, which I want you to screenshot this. News makes your FVG, guys. That's all I have to say. I hope you guys enjoyed the video. I'm gonna make many more. I make like 3 a day. Sometimes, like if I don't, I make 1 or none, but I usually make around 2 to 3 a day. There's also a free Discord if you guys are interested. And yeah,